Okay, good morning, everyone. And this morning, our training is going to be on the POC. POC stands for point of control. Now, what our POC essentially is, what our POC essentially is finding the point or price on this market where the institutions, where the most money has entered the market. So institutions, banks, those types of things that have entered or removed money from the market. That level of interest is going to give us another indication on what potential direction this market would want to go. Okay. Now, the big difference here with the point of control and the reason we use it is that, when you first sign up, even when you first sign up for TradingView, you get this bottom box down here that has a volume profile, right? Up and down volume. That volume is what we call time-based volume, right? So essentially the volume candles you see in that little box on the bottom of your chart is based on the volume that is inside these candles. Okay, so it's based on the volume, obviously, of the time of this candle, right? That little chart you see underneath, right, is based on how much volume is in that candle, right? So it's time-based, how long that volume was, this minute candle. What we're looking for is we don't take trades based on time, right? So we're not taking trades from 3 o'clock to 4 o'clock or 4:30 to 5:30, right? We're taking trades from price to price, right? We're entering at 950, taking it to 34.50, right? We're taking 100 pips, right? We're taking it from price to price. So what we want to understand is what could potentially be between those prices, right? That's more important to us because, we're not taking time-based trades. We're taking price-based trades. And because we're trading price to price, we want to know what's happening between these prices, right? That's, what these EMAs tell us, right? They're based on price, right? That's what, these support and resistance levels, they're based on price, right? So we're looking to understand the volume, right? We're looking to understand the volume between these prices. So what this POC does, or point of control, what it shows us is it shows us where the most interest on the market is, to understand that can be a rejection area, a slowdown area, right? A bounce area, or a target, right? That, because it is something that's in the price that is going to show us where this chart might want to go or what it might want to do, and give us, another little, little advantage to what we're seeing in the market, right? We want to know what's happening between these prices. Like if we want to take this trade from 985 to 250, we want to know if there's something in between here, right? We want to know if there's something that in between these prices, that there's something that might slow us down or bounce off of, or maybe we use that as a target, as a safer target, right? Not get our trade a third of the way and then it hits something that we don't even know is there because we're not identifying it, and rejects it and comes back down. Now our point of control will probably be here today, but that's why we use the point of control. Okay, because we want to know what's happening in these prices. We want to know what's happening in these movements, because that gives us a better indication of what might be in the way of our trade, right? And we use this we use this analogy quite a bit, and this is something, Steven, who's on this call, uses as well as, and this is the analogy I've used for a long time, is this surfing analogy, right? We're trying to catch this wave, right? This wave coming down or this wave going up. We're trying to get on that wave. Now, if you were surfing and you were about to get on a wave right here, it's coming at you, you see it starting to pick up steam and coming at you, you're like, okay, well, I want to get on this thing. You're going to want to know whether there's something in your way, right? Like if you see the wave, you're getting ready to get on the wave, and there's, a log in the water over here, you're probably not going to get on that wave, right? Because you want to make sure that log's out of the way first, right? Before you put yourself into this danger moment, right? Because that is going to be in the way, right? So we want to make sure there's nothing in the way before we're going to get into that trade. Okay, so that's the first reason we use this POC, okay, which we'll get on the chart here shortly. Okay. Yes, you don't want to get eaten by the great white shark, D. Okay. Now, the second reason we use this POC, okay, is it also helps us with the indication of direction. Okay. And not just what might be in the way of the price, but it also helps us indicate the direction of the chart and why it's so important that we continue to use this. Because with the POC, the point of control, which we're going to put up on here so we can see it, and we'll show you the graph. Okay, so if you want to put this up on your chart and use this, we're going to pick a time frame of what's happened in the last 6 hours on the chart. Okay, for US 30. Oop, I got to get this to 15. Okay, so we go in here, we go to this prediction and measurement tools, the little drop down, and at the bottom here it says fixed range volume profile. Okay, click on that, and we're going to go back 6 hours on this chart. So you can see this candle, this 15-minute candle, is 6 o'clock, and we're going to go find the 0 candle, which is essentially midnight, right? Okay. It doesn't matter if it's the top or the bottom. It's just as long as you're clicking on the body of the candle, it'll get the whole thing. Okay, we'll click that. Okay, now I'm going to zoom in on this little graph here. Okay, so as you can see, the highest amount of volume right in here is this. Okay, is this part of the graph. Now imagine this was on the bottom and flipped on its side. That's what you'd be looking at the bottom, of course, right? For highest amounts of volume. So what we're looking at here are the different colors. Okay, now you can see the different colors, different shades. If you use this and you don't change the settings, they'll actually be, I think they're a yellow and a blue color, right? And it'll give you a little bit different. You can change that to red and blue, and then you would know what sell volume and buy volume is here. We're not that interested in whether it was sell or buy. We're just interested in where the most was, because that spot and that position is where the most money has entered the market. So that's going to be a place where buyers and sellers are both trying to figure out control of what's happening, right? Because there's a whole bunch of buyers and a whole bunch of sellers in here, as you can see there is in that graph. They're essentially, kind of fighting each other, right? Buying and selling. So once it starts to move away from this line, one of them has control of it. Now, who knows how much control they have or how far it's going to go? It's just another indication for us to understand where this chart would want to go. Okay, as you can see, that's the highest amount of volume in between these prices. You can see the blue. Price to price. So essentially between these 100 pips, this has been in this 100 pip zone for the last 6 hours, and you can see that's the chart it's using. Okay, that's the amount of price it's using. Okay, so we are gonna, all I do is take that red line, I extend a yellow line so it stays on there all day long so I can see it and I can use that. Okay, now I take this graph off, but what you guys can understand, you can see these are the top, 10 candles or so in here, right, where they had the highest amount of volume. So this area is the strongest, with this being the point we really want to understand. Okay, so, and then I'll take this off the chart because I don't need to see the graph anymore. I just want to know what this level is. Okay, so the last part of this POC, this gives us that price, that level that had the most interest, right, where the most selling and the most buying. This is the most, a lot of people think that this candle had the most volume in it, but it doesn't. This candle actually has the least amount of volume in it because it's one type of volume, right? This is just buy volume in this candle, right? So when you have this kind of up and down where buyers and sellers are entering the market or leaving the market and volumes coming in and out and in and out and in and out, that's where you're going to have the most amount of volume. Okay. And that's where we get this point. And now what that means is in this point, like I said, those buyers and sellers, we're having a battle, right? up and down, up and down. And so once it started to move away from this POC, which we have news coming in 15 minutes, so it's probably not going to get too far away. Okay. Once it started to move away from this POC, then the buyers had control of it. So if this thing starts to move up away from this POC, right, we have buyers. Okay. Okay, so once it starts to move up away from this, right, we have buyers in control of it. Now it's come back and tested it, which means that it's probably going to take some more of those sellers out and potentially start to move back up. But we'll see, because that news is coming. So we're going to get a bunch of, up and down in the market. No, it's not an EMA. No, it's literally a straight volume. It's not an average. It's literally the highest point in that last 6 hours between those prices. This is the highest point of interest. Okay. Goes this direction. Right. Okay. Right. Now, why is that important? Why is it important to know who has control? What is the most important? Because we're only trading in a short term, Abby. That's why we only use 6 hours. We're only trading in a short term. Okay. We don't want to know a week, because we're literally trading in 15 minutes, because we already have the trend. This is just one of those confirmations, right? So this is, if you know the trend, which you can see on the 15, it's turned blue, which obviously, like I said, there's news coming. So this trend is obviously called it right at the top of that rejection area. Okay. It's another confirmation. It can be a resistance zone. Yes. What this does is it's another confirmation of what direction this chart want to go. So if it's already on an uptrend and it's above the POC, now 1, 2, both of these things are pointing in that direction. Okay. And I'll use this thing usually till after 10:30. Once London closes, I shift my POC again. Okay. So usually it's like 3 to 4 hours ish I use. Okay. This is once we establish the trend. Okay. Once we establish the trend, which it says it's an uptrend here, but you can see it's coming back to the POC and there's news coming and these EMAs are right on top of each other. So I wouldn't get too excited about that. Switch to a buy trend. Right. But once we understand the trend and what direction the trend wants to go, if that then also matches who's in control of the market, right? Who's in control of the market, then both of those confirmations help us with the direction we want to take our trades. Okay, so this is a secondary confirmation on what direction this chart wants to go. Okay. Yes. Okay, so this would mean buyers are in control. This would mean sellers are in control. It matches our trend. That's why we identify, right? Below the POC. Right now it's above the POC. It's right on it. And our trend is up. So it is actually above the POC and it is on an uptrend. But like I said, we got news coming in 10 minutes. So this thing's probably going to hold tight in this area till about, for the next 5-6 minutes or so here. Okay, and I'm going to answer these last 2 questions and then we're going to stop our recording. When London opens and you redraw your POC, is it still? Yes, it is still a 6-hour POC. You should do it whenever you get to the chart. You should redo it. Okay. If you get on at 8 a.m. PST and then you come back at 11 PST, redo it again. Okay. That'll make sense. All right. Let's stop our cloud recording for today.